Three stocks I'm buying November 2018 edition. Welcome in, guys. It's my favorite time of the month. Each and every month I do this series on this channel. Three stocks that I am planning on buying in the upcoming month. This month being November 2018. I hope you guys really enjoy this as always. I'm going to go into 7 reasons on each of these stocks on why I am buying them. And if you're new to this channel, basically I'm a long-term investor in companies. I'm planning on buying into these stocks and holding them long-term. So regardless if they go up a little bit, down a little bit over the next few weeks or a few months or whatever, it really doesn't make a difference to me. So I hope you guys enjoy this as always. By the way, if you want to come spend a day with me and Graham Stephan all around personal branding, building a personal brand online, stock market investing and real estate investing, that's going to be the first link down there in the description. You have less than 30 days left to get tickets for that. So I hope to see as many of you guys there as possible. And let's get into this. Alrighty guys, time to get into these 3 stocks now. The first one is a company named Skyworks Solutions, ticker symbol SWKS, okay? Why I'm planning on buying this stock in the upcoming month and adding some additional shares. I've added some shares in the past, but I haven't built a really massive stake in this company. It's a stake I want to get to be a lot bigger in this upcoming month. There are 7 core reasons why I want to do this, okay? The first one is this is a business that is expanding despite a slow smartphone market. The smartphone market for a long time had been on fire. You know, the numbers were just going up like crazy. The last year or so, the smartphone market in general has slowed down substantially. However, despite this slowdown in the overall smartphone market, Skyworks Solutions has still been able to expand their business. And if you look at Skyworks' numbers over this past year, they're still very, very strong growth numbers despite a weak overall smartphone market right now. So that's the first reason that this company can expand even if smartphones don't really grow volumes anymore, okay? The second reason is this company is so well run the past 10 years. This company, you can look at its stock price, you can look at its revenues, profits over the past decade, and you're going to see that they have expanded dramatically. It's a very well-run semiconductor company. They know how to get in with the big customers and stay in once they get in, okay? And they know how to fight off much bigger competitors out there. So it has been a very, very well-run company the past decade. The third reason is this company has a ton of growth vectors in the Internet of Things, IoT devices. Think about, Skyworks Solutions' core business is smartphones, okay? Chips, selling semiconductor chips into smartphone products, okay? To the big customers like Apple's or Samsung's or whoever out there, all right? But Internet of Things is a massive opportunity for Skyworks Solutions where all these devices are starting to become connected to each other. You can think about things like, Apple Watches or just wearables in general. You can think about speakers that are in your home that you talk to. All these type of things are all the Internet of Things. You can think about your microwave that might be connected somehow to some other device, or the refrigerator that somehow does a grocery shopping list. Like all these things we're going into and all these things that a lot of people already have, these Internet of Things, this is all a massive, massive opportunity for Skyworks Solutions. And they're benefiting from this already, and they will continue as these devices become more and more popular over time. That's reason number 3. Reason number 4 is just a diversified business. There are 2 ways a semiconductor company can go. One is they can be super into just one customer, and that customer kind of completely dominates their revenue and profits. That would represent like Cirrus Logic, which is a stock I own in my portfolio. Cirrus Logic is like 80+% of their revenue comes from Apple, and they live and die by Apple. Skyworks Solutions is pretty much in any big electronics play you want to know out there, okay? Apple, Samsung, Google, Amazon, it doesn't really matter who you're talking about. Skyworks Solutions is likely a customer of the biggest electronic companies out there. So it's not like they're just relying on one company to kind of live or die by that company. Very well diversified business, and that's another reason why this company has been so well run the past decade. Right now, this company is at a forward PE of 10. A forward PE of 10 is ridiculous for this type of business, okay? Skyworks Solutions is an expanding business. Revenues and profits expanding, all right? And they have so many big, huge opportunities in front of it to be at a forward PE of 10. That's like as if it was a dying business, or like this business is done, this is a dead business or something. When they have so many growth vectors in front of this company over the next half decade to decade, it's ridiculous, guys. It is such a disrespect to be trading at a forward P of 10 right now. It's an absolute joke, guys. That's reason number 4 there. Reason number 5 is this is a great balance sheet company. Or actually, that was reason number 5. Reason number 6, this is a great balance sheet. If you want to look at one of the best balance sheets you can possibly look at Skyworks Solutions, okay? We're talking about no debt, loaded up on cash and investments. Type of business you want with a semiconductor company, just in case the dark days come, a recession comes, or semiconductors are just slow, they can get through that type of situation because they're not loaded up on debts and whatnot. A great balance sheet. And the last reason number 7, is 5G represents a massive opportunity for the next 5 to 10 years for this company, all right? 5G is going to start getting rolled out next year in a real way, all right, in 2019. And that's going to kind of be the first startup year. And 2020 and 2021 are going to be the years that all of a sudden like 5G is upon us, and it goes from just being, oh, that's something in the future to now it's reality, okay? 2020 and 2021 are going to be those years that represent it, where pretty much every big smartphone player out there will have 5G, smartphones as their main devices, okay? And we'll go from 4G or 4G LTE to 5G. This opportunity for 5G is not just for smartphone opportunity, but the Internet of Things, machine learning, artificial intelligence. All this stuff is a great growth catalyst for Skyworks Solutions over the next 5 to 10 years. They're in a position to be one of the biggest companies to capitalize off 5G out there. When I think about companies that have an opportunity to expand their business quite dramatically off of 5G, Skyworks Solutions is one of the first ones that comes to my mind. So with all this being said, at a forward P of 10, with how well run this company is, the great balance sheet, and all these big, huge opportunities in front of itself over the next, half decade to decade, it's rather a joke that it trades at the type of valuation it trades at right now, guys. So needless to say, that is why Skyworks Solution is one of the stocks I'm planning on adding a lot more of in this upcoming month, November 2018. Let's get into stock number 2. Alrighty, guys, time to get into stock number 2, which is a company named US Steel, ticker symbol X, all right? What are the 7 reasons why I love this company? The 7 reasons are, the first one is this is a simple business that is needs-based. This is a steel producer. It's about as simple as a business you can get, okay? And basically any products that need to be made with steel, they're one of the biggest steel companies out there, all right? It's a needs-based business that if you need steel to make any type of product or anything out there, you're gonna go to a company like US Steel. A very simple business, not hard to understand. It's just a very, very simple business that whenever people need steel, they need steel, all right? The second reason is profits are absolutely exploding for this company right now. This is a company that just a couple years ago was taking massive losses on their business and looked like it was just a company that was dead and it was just going to be, dead in the water forever and ever, okay? Until somebody got elected named President Trump, and he's kind of helped turn things completely around with a lot of the tariffs that we'll get into in just a second. And so now their profits are absolutely exploding for this company. And it went from a company that, very few businesses wanted to use. Now everybody's like going to this business and they want to use US Steel products out there. So it's a massive, massive change for this company. Reason number 3 is this company trades at a forward P of 4. Yes, 4. You heard me right. Companies that trade at a forward P really like under 8 are businesses that sometimes are seen as like this business is done, like things are going to get much, much worse for this business. This is a peak for it or something. I don't feel like that at all with US Steel. I don't feel like today's profits are the peak and things are never going to get better from here. I think this business has more growth coming in the future. And so the fact that it trades at a forward P of 4 is absolutely ridiculous. We're talking about one of the biggest steel makers in all of the United States. To be trading at a forward P of 4 is unbelievable to me. I think it should be trading at somewhere around a forward P of 8 to 9, somewhere around there, which is basically, would double its valuation overnight, all right? Now, there are a lot of talk about, oh, this company might be hurt by tariffs. This company might, see their business go down because of tariffs, things like that. There's one company that for sure, and one industry that for sure is benefiting massively from these tariffs that are on China and whatnot, and that is US Steel. US Steel is benefiting in a massive, massive way. So, when people are looking around, they're kind of like thinking, well, what are some companies that can benefit from this whole tariff situation? US Steel is absolutely, without question, one of the companies benefiting more than any other company out there, okay? Plant startups continue. So basically, US Steel has had a lot of assets that have just been sitting dormant. Assets meaning a lot of different plants all around the United States and some in Europe that have just been kind of sitting dormant for a while, okay? Because, Chinese steel has just kind of been able to flood into the United States for a long time. And that's just kind of the way it's been. So they had to shut down a ton of plants, fire a lot of workers and whatnot. What has continued to happen throughout 2018 is plant startups have been continuing in a massive way. So they're revitalizing their old assets, their old plants and whatnot, getting those back started so they can produce more steel out there. And these continue to go on. So this is just kind of helping out their business in general. Number 6, the 6th reason is a steelworkers deal is done now. It's in the past, okay? So this was kind of a cloud overhanging U.S. steel stock, and this just got approved a week or two ago that now the deal is done and the workers are set to make their future wages and get, future raises and whatnot, and that's just done now, and it's all in the past. And I think that's just a big thing to get that cloud out of the way and just know that, for several years out, that whole situation is taken care of, guys. And the last reason number 7, is although this isn't technically a government-backed company, when you really look at it, it kind of is a government-backed company. President Trump, one of the things he said more than anything is he wants to save the steel industry. He thinks it's one of the, it's been one of the biggest focuses of him, in his, election campaign and basically since he became president. So when you look at U.S. Steel, for at least the next 2 to 6 years, depending on if he gets reelected, U.S. Steel is going to be in a huge position of power as far as, being the company that people go to if they want steel products. However, even when I look at this, when I think about like the next administration that comes in, whether they're going to be Republicans or Democrats, I don't think they're necessarily going to go, ahead and real quick to go ahead and take off the tariffs off of China and whatnot for steel products. I just don't think that's going to be realistic. I think this tariff situation is going to continue to be like this, at least on steel and aluminum products, for a long time into the future. So when I look at this, I think this is almost like a government-backed company that the government literally wants them to succeed in a massive way and bring back the steel industry. So, whether Trump's in or out over the next 2 to 6 years, I really don't think it's something that will be taken off, and say, oh, no, let's just take all those tariffs off of China as far as steel and aluminum in other countries, and let's just allow all that steel and aluminum to flood in here, because I think it would just be a bad look from workers, because all of a sudden you'd have tons of workers getting laid off. That would go into the news. So in my opinion, this will continue to probably be a government-backed industry. If those tariffs did ever get removed from China as far as steel and aluminum products go and whatnot, I would probably just sell out of U.S. Steel. I'd be like, okay, time for me to get out of that. But as long as those tariffs are in place, there's no reason for me to sell off this stock when it's basically almost like a government-backed guaranteed stock to succeed into the future because of those massive tariffs, guys. And so for that reason, that is stock number 2 I'm planning on buying in November 2018. Now let's get into stock number 3. Alrighty, guys, time for stock number 3. Stock number 3, I call it the easiest money in the stock market over the next 5 years in terms of the most reward potential with the least downside for the next 5 years. And that stock would be Facebook, ticker symbol FB. I had to end up doing 8 reasons why I love this stock so much instead of 7. I could have probably done 800 reasons, honestly, okay? The first reason is there are growth levers everywhere for this business. So it's not just like a U.S. Steel where they have one thing they do. It's like a steel business and that's their one growth lever. And if it's going bad, it's going really bad. And if it's going good, then it's going really good. Facebook has growth levers everywhere with with their platforms, okay? It's not just like they have the Facebook platform, okay? Then they have Instagram, which is just a massive growth piece for the company in terms of revenues, users, profits. It doesn't matter what you want to talk about Instagram, it's a massive growth lever. And there are things inside of Instagram that are growth levers inside the platform. So think about Instagram shopping down the road. You can think about Instagram TV, all these different things that will be coming in the future. Those are growth levers. You can think about Facebook Messenger. You can think about Oculus. You can think about WhatsApp. There's just massive, massive growth levers all over the place for Facebook. And that's the type of business model I really love because it's not just like, oh, they have this one thing over here. And when it's good, it's really good. And when it's bad, it's really bad. No, this company has growth all over the place, guys. It's a growth beast, okay? Second reason is profits are exploding for this company right now. They've been exploding for the last several years and they will continue to in the future. The profits continue to go up because more and more ads getting played on their platforms, okay? And then on top of that, ad rates going up. It's a double whammy and advertisers, more and more spend is coming on. Profits just continue to explode. And it's one of those things, once you get things built out the way you need it, then all that future money that comes in just basically goes straight to the bottom line. It's a beautiful, beautiful thing, okay? A pristine balance sheet. If I said, Skyworks Solutions had a good balance sheet, it's nothing compared to Facebook. Facebook, we're talking about a company that after this quarter should have somewhere around $50 billion, if not more than $50 billion in cash and in cash equivalents, along with investments versus zero debt, okay? It's literally about as good of a balance sheet as you can get in the world. 2 reasons why I love this. One is it gets the company through a rainy day. If they ever have trouble in their business, it gets them through a rainy day. The second reason is the next time we have and this is never talked about, okay? Second time we have a massive recession, whenever that comes, or just a decent sized recession, and the startup space slows and you have less venture capital money going into some of the smaller startups, guess who's going to be well positioned to go ahead and buy up a ton of startups that have huge growth potential? Facebook is, okay? It's a beautiful thing with that business model, okay? A pristine balance sheet. The next thing is they're spending a lot on security right now, which is hurting some of their profitability. Although profits are still exploding, they aren't going up nearly as much as they could be because they've hired like 10,000 workers this year alone for security. They've also hired a lot to, watch out for things as far as elections and whatnot, in countries trying to interfere in different elections. All of this is for a huge long-term gain to kind of, save their platforms from kind of all this negativity they had to go through in the past year and a half. So this is, in my opinion, money well spent that will help kind of, save the business long term, all right? The next reason is ad rates are going to skyrocket over the next 5 years. Basically, it's the same thing that happened with Google AdWords back in the day. You had a lot of advertisers come on, you use Google AdWords for a few years for very, very cheap. That's what's happened with Facebook and Instagram. And then all of a sudden, what happens over time is they get more and more and more expensive. Why? Because advertisers spend more and more money on there because the attention is there. The attention is on Facebook. The attention is on Instagram. The attention is on WhatsApp and on Facebook Messenger. The attention are on these platforms. So what ends up happening is more and more advertisers come on, bigger and bigger spends, and you only have so much real estate to advertise on these platforms. So what ends up happening is ad rates start to push up, and all of a sudden you might have been paying $5 per 1,000 views. All of a sudden you pay $10 per 1,000 views. All of a sudden $20 per 1,000 views. All of a sudden $30, and it continues to go up and go up. This is the advertising industry for the longest time, whether you're talking about television, radio, whether you're talking about Google AdWords, banner ads, things like that. It's just the way it works, okay? And where does all this money end up going? Straight to the bottom line. It's a beautiful thing, okay? Next thing is they're positioned for virtual reality leadership in their business, okay? So with Oculus, it gives them a great opportunity to literally possibly be the leader in virtual reality. It's almost like a call option for the company in the future. When I look at Oculus and the device they have coming out this spring, it looks like it's going to be a device that attracts a lot of people to it, okay? Including myself. I'm going to buy one of those virtual reality devices that are coming out this spring. So they're in a position where they could end up being the virtual reality leader, which would be huge for the company because we know virtual reality is going to be a big trend in the future, all right? The last two reasons here is they're coming for e-com. This is a secret thing. So obviously the advertising business that is talked about more than anything, but in my opinion, Facebook has a lot of ambition secretly to expand into shopping, okay? So you can kind of see this starting with Facebook Marketplace, which is kind of like almost like an eBay competitor, but I think they're going to do a lot more things as far as Facebook shopping in the future, also Instagram shopping. So somebody might like, let's say, Victoria's Secret on Instagram, okay? So also Victoria's Secret can send direct links through their stories or different things that say, hey, come buy our products directly from there. I think shopping e-commerce, I think Facebook has a lot of big ambitions there, and this is not talked about at all. This is a huge opportunity for them because they have so much of the world's attention right now that e-commerce is a huge potential for the company over time. And the last part is this valuation on the company right now is disgusting. Okay, it's a disgusting valuation. We're talking about a company with a forward P of 17. A forward P of 17 with these type of growth vectors in front of the company, it's ridiculous, guys. And with this type of balance sheet, to have a valuation where it is right now is absolutely silly. This company should be trading at somewhere around a forward P of 30 to 35. The fact that it's trading at around half of that right now is absolutely mind-blowing to me, okay? They have so much potential to grow this business over the next half decade to a decade that to be trading at where it's trading at, it's the most disgusting value I've seen since Apple a couple years ago was trading around $90 or $100 a share. Back then I was like, what is Apple trading at this? Do people not understand like how the average selling price of iPhones is going to go up in the future? Do people not see the services? Like I was like, why do people not see this? This was like 2 or 3 years ago. And now since people see the future for Apple, the stock's well over double. And when I look at Facebook right now, I'm like, people just, they're not seeing it right now. It's just all negativity and they're not seeing how much this company has going forward in the future. Those are 3 stocks I'm planning on buying November 2018. Let me know what you think about these 3 stocks down there in that comment section. Let me know if you are buying any stocks out there. And by the way, if you want to come spend the day with Graham and myself in Las Vegas, make sure you get the tickets. There's the first link down there in the description. Less than 30 days to get tickets, guys. Hope to see you all there. Thank you for watching. Have a great day.